Companies of all sizes need to both plan and analyze their data to optimize business performance. In this scenario, I will play the role of a financial analyst at a consumer product goods company. It's the beginning of the new fiscal year, last year's results are available, and we've started working on reviewing this year's budget. I always check the chat panel first when I open the IBM Planning Analytics workspace book that I use for budget and financial reporting. Team collaboration is really important in the budget process when there are so many pieces we have to put together, and collaboration is easy with the chat feature. Today, I see 2 requests for changes coming from our CFO. For the first request, he is asking me to reduce the overall plan by 20% for Florida to bring the budget in line with prior year expectations. The second change I'm asked to do is to reduce days sales outstanding to 35 days to help increase cash flow and to find ways to improve cash position. To help me out with the analysis, he is also pointing me to a new IBM Cognos Analytics dashboard with relevant information. Before I start, I want to understand the reasons behind those changes being requested. In analyzing last year's performance, I see that it was a good year. At a total company level, actual versus budget looks good all across. Sales and net income show growth for all quarters, while operating expenses were left flat. I can drill down and drill up on each of the charts to get more details. For example, to look at net income by state. However, the days sales outstanding metric shows an alarming increase throughout the year. Interesting. Is this trend going to continue? Now I understand why the CFO is concerned and the need to improve the cash position. I'm ready to make the changes, and it's not going to take long since IBM Planning Analytics Workspace has out-of-the-box capabilities that simplify and accelerate planning, budgeting, and forecasting processes. Going to the Income Statement tab, I need to reduce the sales budget overall plan by 20% for Florida to bring it in line with prior year expectations. So I select Florida from the Dimension selector. Last year's actuals were used as a baseline for the forecasts. The negative variance indicates the budget is too high versus the prior year expectations. This is what I will fix next. Before I start making changes, though, I create a sandbox that will create a copy of the data I can play with, and then commit the changes only when I'm ready. There are many spreading options that are available out of the box in IBM Planning Analytics Workspace: proportional, equal spread, repeat. I'm given a description for each spreading method, and I'm guided through the process. For example, assuming I want a proportional spread for 7 million, replace the existing values and spread to the left, the data is updated in real time across all months and automatically consolidated. Notice that all the changes show in blue, and this allows me to easily see the impact across all metrics, like gross margin and gross margin percent. However, this is not what I need, so I'll undo these changes. This time, I'll use the input cell for total sales to decrease total sales by 20%. Notice that I can use shortcuts for spreading. I do not have to do the math myself. It's a great time saver, and it also reduces my risk of errors. Indeed, this fixed the negative variance for Florida. So I'll add a cell comment so everyone is aware of the change. Cell comments are indicated by the blue triangle in the top right corner. Anyone having access to this cell can view the comments now. Since I'm done with the changes for the income statement, I'll move on to the next task, to reduce the days sales outstanding metric to 35 days to help increase cash flow. To change the days sales outstanding metric, I need to go to the Trial Balance tab to work with the working capital metrics. Again, I use shortcuts to copy the value. Now I can review the impact of all my changes, starting with the balance sheet. Reducing days sales outstanding is improving the cash position, and the accounts receivable is increasing as expected. The charts help me visualize the trends and spot any potential issues. Next, I'll move on to the Cash Flow Direct tab. As it stands right now, I see that the net cash from used in operating activities falls below zero due to the income taxes we have to pay in April. And this leads to a big drop in April for the net decrease in cash and equivalents. Now I can review cash flow indirect, and the financial summary that now shows the new day's sales outstanding number, 35, making sure that we get the intended results all across. IBM Planning Analytics is doing the bulk of the work for me. I only need to make a few inputs. All the business rules are applied. The data is calculated and consolidated on the fly to the total company level, as you can see here on the income statement. Even more, I can perform what-if analysis to compare the base sandbox we started from with the sandbox I created for today's changes. If I'm satisfied with the results, I commit the changes to make them available to everyone. I can now reply to the CFO to let him know the changes he requested are now completed. IBM Planning Analytics accelerates the budget cycle so I can focus more on what matters most for the business, the analysis and improving and optimizing the business processes.